Good morning, good afternoon, ladies and gentlemen, and a very warm welcome to this ARMC Perspectives Africa Fintech Risk and Compliance webinar series. On behalf of the team at ARMC, I would like to thank you very much indeed for making the time to join us, and for thanking our speakers for agreeing to be part of this very important webinar. My name is Saldis Jushu Sheriff, and I'm the founder and managing partner of ARMC, Africa Risk Management and Compliance Partners Limited. We are a risk solutions company, and we operate and focus primarily on meeting the needs of Africa's financial institutions. And of course, that includes fintechs. Before we delve into the main purpose of our webinar today, which really is about hearing from our keynote speaker, Mr. Andrew Kaweri, we'd like to give you just a brief overview of ARMC itself. So ARMC, as I said, is a risk solutions company. We provide clients with solutions in three core areas: around risk, regulatory compliance, and cybersecurity advisory, where we help clients to build the sustainable frameworks that enable them to be able to manage their businesses in a controlled way. And in that, for example, we focus on ERM or enterprise risk management frameworks, as well as financial crime AML frameworks, data protection and cybersecurity related frameworks as well. So we really work with clients to build the frameworks that allow them to manage risk better. We also provide training. So these webinars are part of our outreach to members of the risk management and regulatory compliance community across Africa. But we do roundtables as well that are smaller groups where people focus on the core issues themselves that we'll be talking about. So for example, today we're talking primarily about the licensing process for fintechs, and there'll be a follow-up roundtable in a couple of weeks where we'll be delving in with experts around this topic. We provide training in a lot of different areas: in cybersecurity, in financial crime, as I said, in risk management, in data protection. We know that there's a lot of new data protection regulations, not just in Uganda, but across East Africa and even in parts of West Africa as well. And we do a holistic Pan-African risk management training offering around that, data protection training offering around that. And of course, we offer technology solutions, AML technology solutions, particularly for fintechs, but of course for more established banks, for microfinance banks, etc. As I wrap up on the ARMC piece, we're present in Kenya, in Uganda, in South Africa, and in Nigeria, but we do work in a number of African countries. As we move over to the main purpose of our session today, we're joined, and we're very honored to be joined by Mr. Andrew Kaweri, as I mentioned earlier. Andrew is the Acting Director for the National Payments Systems Department in the Bank of Uganda. Andrew, we are very happy to have you join us, and you are most welcome. ARMC has a long-standing relationship with the Bank of Uganda, and we are hugely confident that you will find this session useful, helpful in terms of the way in which you take your businesses forwards. Our agenda today is going to be focused on two core areas. Andrew is going to talk about the licensing process. So the title of this webinar is really exactly as it's written. We want Andrew to bring to us as an audience, all the insights on exactly what it takes to be able to obtain a payment service provider license in Uganda. And having spent time talking to Andrew, we're confident that that is what he will be able to deliver for us today. We are hoping that our second speaker, Mr. Kevin Waba, who is the Vice Chair of FITSPA. So FITSPA is the Financial Technology Services Providers Association in Uganda. So, the Fintech Association of Uganda. We're hoping that Kevin will be able to join us And Kevin will give us an insight into FitSpar, but also Kevin is also a fintech incubator himself, an investor based in Uganda. So we're looking for real life insights and real life stories about what it's really like to run a fintech in Uganda. Ladies and gentlemen, I want to thank you for having Born with me to be able to give you a little bit of an introduction into ARMC and who we are. It's always good to know the people that you're dealing with and working with. But with no further ado, I would like to be able to focus now our attention on the main reason why we're here, which is the keynote address by our keynote speaker, Mr. Andrew Kaweri. Andrew, are you there?
Yes, I am.
Fantastic. With no further ado, I'd like to be able to welcome you, Andrew.
I'm happy to share our perspectives with you for the next 30 minutes or so as we share with you on Bank of Uganda's regulatory approach when it comes to payments service provider licenses. My presentation is going to run around 3 areas. I will briefly highlight a little bit of background information, and then we'll delve into the licensing requirements, which is the crust of the presentation, and we'll hopefully have a little bit of a discussion at the end. So our approach to regulation was indirect until September 2020. The payment services were hitherto under the dual mandate of the Uganda Communications Commission and the Central Bank. So the regulatory approach was indirect to the extent that payment service providers were regulated by the Central Bank, but through the partner banks. So the Bank of Uganda previously did not deal directly with the payment service providers, and indeed the approvals would be granted through letters of no objection, which would be given to the telecom providers through their partner banks. And indeed, this was primarily because the payment services were, the model in Uganda was telecom-led as opposed to bank-led. So we had that gap in the regulatory framework. However, effective 2020, the Act was passed and gazetted on September 4th, and the implementing regulations came into force in March last year. And these regulations include general licensing regulations, they include the sandbox regulations, agent regulations, and soon we shall have consumer protection regulations. These will be gazetted in the next few months or weeks. The other key thing to note is that we also published our oversight framework last year, and it is available on the Bank of Uganda website to provide you, the practitioners, with our approach to the oversight of payment services. These laws that I've referred to have explicitly given the central bank the mandate to regulate, supervise, and oversee payment systems in Uganda. And of course, for purposes of what we're discussing today, I'll dwell mainly on the licensing aspect of this mandate and a little bit of the regulatory aspects therein. But again, maybe just to highlight that the central bank's mandate is not only for the privately run payment services, but also the wholesale systems, the wholesale funds transfer systems and clearing systems. Currently, we have the real-time gross settlement system, the clearing system, but also an increasingly popular shared agent banking platform on the wholesale side. So that is the mandate, and that's where we pick our mandate from. So who needs the license from Bank of Uganda? There are three categories of players that we license as a central bank. We do license payment service providers. Payment service providers are technology or payment solution providers who offer either cash deposits and cash withdrawals. They facilitate execution of payment transactions. They may facilitate the issuance of payment instruments or even their acquisition. But generally, payment services relate to cash deposits or withdrawals, and then related payment instructions or payment services, such as payments for merchants and related kind of transactions. The most popular service providers in this category are the e-money issuers. Okay, but we also have players in this space who do not necessarily issue e-money, but they support payment transactions using the e-money created by other payment service providers. Then you have the payment system operators. The payment system operators are generally technology solution providers who support funds movement. They support the movement of monetary value from one financial sector agent to another. And this includes aggregators, it includes the integrators, it includes those that are offering clearing services and the like. It also extends to card schemes. So all these are payment system operators. And then the last category are the payment instrument issuers. These are, and this is the most straightforward category, I guess. These are players who issue payment instruments in the form of cards or other instruments. I would also like to mention that all payment service providers are technically payment systems operators because they do have technology infrastructure that supports the delivery of payment services. So if somebody was to apply for a payment service provider license, by default they must also apply a payment system operator license to support the technology infrastructure on which the services are delivered. So in terms of the requirements, the first and most important requirement, or put differently, the starting point is the incorporation. All applicants must incorporate as limited companies. And this is emphasized because we've had cases where some people think they could apply using other forms of business that are not limited companies. So this is a fundamental requirement. The applicant must be a limited company, and indeed we shall require certified copies of incorporation documents. And what do we look out for? We're going to look out for things like the business objectives, which must be aligned to Section 8 of the National Payment Systems Act. This section lays out the eligibility criteria for somebody to be licensed as a payment system operator or as a payment service provider, including things such as supporting funds transfers, supporting remittances, supporting financial communications, and the like. Those are examples of permissible business objects. It is also important to note that the entity must incorporate within the Ugandan jurisdiction. This is a position that the central bank has taken, even though in Uganda you could actually incorporate or rather register a foreign incorporated entity. Okay, the Companies Act permits the registration of a foreign incorporated entity. However, the central bank has taken a position that the licensees under the jurisdiction of the central bank must be incorporated within the Ugandan jurisdiction. So if you're a foreign applicant, that means that you must set up a subsidiary in Uganda. Now, such a subsidiary must also have a minimum of 2 shareholders. This is a governance concern from our side as a central bank. So all applicants must have a minimum of 2 shareholders. And we've not limited the amount of shareholding for each, but there must be at least 2 shareholders. And then the other important thing to note is that you must give us the details of the shareholders, and this includes beneficial owners. You see, you may have a corporate shareholder, for example, and that corporate shareholder is, say, incorporated in a tax haven, maybe Mauritius or in the Cayman Islands. So if you have a corporate shareholder, we shall require you to disclose to us who the beneficial owners are of those shares. And indeed, these shareholders and the other senior managers will all be vetted to assess their fitness and propriety before the central bank grants approval. And this vetting is done at the applicant's cost. However, we advise you prior to commencement of the exercise. So we write to you and tell you that, we've engaged maybe our external partners, our external lawyers, and they're going to conduct a due diligence on XYZ participants or applicants, and this is the cost. So you have to be advised and given a chance to either negotiate or to commit and accept to meet that cost. So what are the other supporting requirements? One, obviously, you must pay the application fees. The application fees are at Uganda shillings 3 million, which is about $800 or slightly over that. That money is payable to the central bank, and the account details, of course, are provided at the right time. Then you must describe in detail what the products or services you intend to offer are. This detailed description enables us to provide guidance to the applicants on the appropriate license category, and sometimes even the class of license that they ought to apply for. Our regulations provide for different license classes. In terms of category, we have 2 categories: the payment system operator and payment service provider licenses. But there are several classes under those 2. So we've had cases where applicants apply for the wrong classes of license. And so the detailed description enables us to guide you on that, but also to appreciate the kind of service that is going to be delivered, the risks that are likely to be posed to the consumers, but also to the other financial sector players. And obviously, we consider that in the context of your risk management framework. We also require a business plan with financial projections. This business plan, of course, must be feasible. We've had cases where applicants, submit plans just for the sake of meeting the requirement. Okay, but we sit down and look at the assumptions that you lay down, the projections that you sit down and include therein, and assess whether these are reasonable in the context of the changing business environment. And then, of course, the organization structure is of interest to us, and this is mainly to assess whether it's reasonable to deliver the business plan, but also to mitigate the risks that we perceive. So in terms of the organization structure, our interest mainly is on the governance arrangements in place, the plans that the applicants have in terms of corporate governance, in terms of providing reliable assurance functions, such as the risk management function in the entity. We take interest in the internal audit function and how these are integrated into the bigger corporate governance processes. Risk management frameworks, obviously, this is a very key requirement. There is no one size fits all. We have not prescribed the minimum contents for this, because the risk profiles vary dependent on the license categories and license classes that the entities apply for, but also the nature of products and services that are being delivered. So applicants, have a blanket check or a blank check on this, but of course there are certain things we always look out for. For example, the risk assurance function and the establishment of a formal process through which risks are going to be identified, evaluated, and reported to the board of the institution. And inevitably the related matters such as business continuity plans, disaster recovery plans, cybersecurity, and the like must be robust enough to support the business processes that are being proposed. Customer service procedures are the other requirement, and this is of interest to us, particularly from the consumer protection point of view. Many of our people are not, highly literate in terms of digital financial services. So we require the applicants to give us robust complaints handling mechanisms. We require clear disclosure requirements for the customers to ensure that there is protection for the customers who could easily be hoodwinked and them losing the funds. And this, of course, is being buttressed by the consumer protection regulations, which, like I said in my preamble, are in advanced stages of being finalized. Recommendations by persons of good repute. This is part of our vetting requirements. We require recommendations from persons of good repute, attesting to the credibility and moral standing of the nominees. Related to that is the police clearance. Obviously, the police is the institution in charge of law enforcement, so we can't know who is good and who is bad in terms of criminality. So we rely on the police for clearance in terms of criminal history and related misconduct. Credit reference reports enable us to assess financial impropriety for the applicants. So all shareholders, all directors must give us their credit reference history. And if someone has no credit history, then of course, we do our enhanced due diligence using other means, but the CRB reports are a primary requirement. Documents in support of the source of funds invested. Yes, this enables us to assess the AML and CFT risk exposures. Sometimes applicants, think that they will just avail, say, bank statement confirming the receipt of funds, but this is not adequate. Our interest is in the source of funds invested in the business, and the purpose is to rule out AML and related CFT funding or risks which could compromise financial integrity within our jurisdiction. Audited financial statements enable us assess the capital requirements, and sometimes newly formed companies indicate that they are yet to start operations, but that's no excuse from our point of view. So we do require even newly incorporated entities to give us pre-trading financial statements which confirm to us that the applicant meets the minimum capital requirements as laid out in Schedule 4 of the NPS regulations. Tax compliance is part of our basic requirements. Again, to rule out tax crime, which is a financial crime under AML. So we require your tax details and tax clearance from both the Uganda Revenue Authority for resident directors, resident shareholders, but also from your parent jurisdictions if you are a non-resident director. The systems license and systems inspection certificate from the National Information Technology Authority is their requirement. And this, of course, is because the National Information Technology Authority of Uganda has the statutory mandate regarding technology matters. In fact, NITA has categorized the different kind of certificates that they issue, but the ones we normally look out for are certificates of monetary systems providers, so that they do some basic inspections and then issue a certificate, a copy of which is presented to us as part of the application requirements. We require policies for monitoring and detecting money laundering and financing of terrorism. This is a very, very key requirement, particularly in light of the ongoing, global AML issues, and for Uganda in particular, we are stepping up our AML CFT initiatives in accordance with our ongoing discussions with the Financial Action Task Force and the related stakeholders. Many of the applicants outsource some of their services, so we do require that where there are documented outsourcing arrangements, copies of the underlying agreements must be provided to us for our technical review. These outsourcing arrangements may include core systems, but also support arrangements. The most basic example is risk functions and internal audit functions. Many of the applicants have opted to outsource these functions, so we require copies of those outsourcing contracts for review. Participation in domestic or foreign payment systems, we've not had any applicants interested in this, but for those that intend to offer, for example, cross-border payment services that are linked to payment systems in other jurisdictions, these details are required at the onset. We do require the applicants to provide us with agreements with financial institutions for purposes of recovering charges and fines. This is a requirement currently, mainly because payment service providers do not yet have direct access to the RTGS at the central bank, so we do not hold accounts for the payment service providers as a central bank. So for purposes of recovering fees and charges, we require the applicants to enter into agreements with the licensed financial institutions which have accounts at the central bank for purposes of recovery of charges and fines. The other requirements are around participation or operations in other countries. For foreign for companies that have operations in other jurisdictions, we require you to disclose to us those other jurisdictions, and that enhances the due diligence, but it also supports your application if you have presence in other jurisdictions. The other key requirement relates to minimum share capital, and this is something that some applicants misinterpret. I want to be very clear on this and state that Bank of Uganda does not require you to bring the minimum capital to us. Okay, we do not require you to bring the minimum paid up capital. However, we require that one, your incorporation documents, specifically the memorandum of association, must have an authorized share capital that is not less than the minimum paid up capital, minimum capital requirement laid out in Schedule 4 of the regulations. So the authorized capital, the authorized share capital must not be less. It can be more than the minimum required, but it cannot be less than what has been laid out in the regulations. Secondly, that capital must be paid up. It must be fully paid up. And thirdly, it must not be impaired. Okay, what some of the applicants do is to put in, say, if the minimum capital is maybe $30,000. Okay, they put in the $30,000 and pay it up, but then use up part of that capital for the pre-incorporation pre-operation expenditures, like recruitment of the skeleton founder staff, okay, like processing the application where a certain costs are incurred. So by the time they come to us, the paid up capital is already impaired. Now that is something we'll throw back to you, and the solution to that would be paying up or injecting enough capital that is able to sustain the operations for a reasonable period before the operations start under license. And then lastly, I would like to mention that the central bank has the prerogative to request for any other information that is considered relevant for purposes of the application. And the applicants as well can submit any other information that they think will support their case for a license. As I move towards the end, ladies and gentlemen, I would like to highlight the minimum capital requirements, which you might also find in Schedule 4 of the National Payment Systems Regulations. And these are pegged to the respective license categories and license classes, as you can see. For payment systems operators, if your monthly transaction value is in excess of 100 billion Uganda shillings per month, that is about $260,000 or slightly over that, then your minimum capital is 1 billion Uganda shillings. Okay, your minimum capital is 1 billion Uganda shillings or about $260,000. Apologies for the mishap. 260 is the minimum capital, not the average transaction value. Okay. And then if you're a medium funds transfer operator, meaning that your transaction values are between 1 billion per month and 100 billion per month in Uganda shillings, then your minimum paid up capital is 500 million shillings or about 130,000 United States dollars. And then, the scale follows, as you can see on the screen. Clearing systems, 500 million shillings, settlement systems, 250 million shillings, and then third-party systems for 100 million Uganda shillings, which is about $26,000 or $27,000. Regarding the e-money issuers, the minimum capital requirements are higher. In our assessment, we saw that e-money issuers pose higher risks, so their minimum capital requirements are higher. And for the e-money issuers, the requirements are pegged to the trust account values, or put differently, to the total e-money issued. So if the total e-money issued is in excess of 200 billion shillings, then the minimum capital required is 10 billion Uganda shillings. And 10 billion Uganda shillings is equivalent to about $26,000. If the trust account value is between 500 million Uganda shillings, but less than 200 billion Ugandan shillings, then the minimum capital requirement is 5 billion shillings or about $1.3 million. And if you are a small e-money issuer with a minimum, with a e-value issued that's less than 500 million, then you require only about $66,000 in minimum paid up capital. Then lastly, the fees payable. These are application fees, license fees, which are also payable on an annual basis after the license has been issued. For the large funds transfer system, the license fee or annual fee is 25 million Uganda shillings, which is about $6,600. Medium funds transfer systems pay 20 million Uganda shillings or about $5,000. And the small funds transfer systems on an annual basis pay about $4,000 in annual fees to the central bank. And the same applies to the e-money issuers, whose fees range from 15 million Uganda shillings for the small e-money issuers to 25 million Uganda shillings for the large e-money issuer. Maybe before I leave these slides, this section on capital and annual fees, I would like to mention that the bank is considering the revision of these minimum capital requirements, particularly to accommodate a few more bands in the medium category. Okay, we're considering expanding the medium funds transfer systems, rather the medium e-money issuer band, okay, to accommodate a few more bands and therefore permit a more graduated approach to the minimum capital requirements. But that is a work in progress, and you'll definitely know when that has been approved and the instruments gazetted. So my last slide is on the other key provisions that I wanted to highlight. And one is that the central bank has an obligation to make a decision on an application within 60 days from the date of receipt of a complete application. Okay, that is after receiving all the required documentation. Now, normally applicants submit and say certain other details will be provided in due course. Now, we don't consider that a complete application, even though we start on the preliminary reviews at that point. So the 60 days are effective after you've addressed all the concerns from the central bank. Okay. And from the experience so far, the applications are taking at least 4 weeks. We've seen applicants receive licenses in as short a period of about 4 weeks. But those are the ones that submitted solid documentation that not only met all the requirements, but that was very, very well construed and very well thought through in terms of the kind of things that the central bank would be interested in. The licenses may be subjected to particular conditions as deemed fit. That is picked from Section 9(2) and Section 10 of the National Payment Systems Act. And these licenses are valid until revoked. So if you get a license, do not expect to do an annual renewal. The licenses are valid perpetually unless revoked by the central bank. The license fees, which is the most preceding slide that I covered, are payable upon issuance of the license and thereafter on an annual basis. And then lastly, an applicant can apply for 2 or more licenses in one application. However, you must pay the respective fees at the license category. So you may apply for a payment service provider license and a payment system operator license at the same time, but that means that you pay an application fee for each and you subsequently pay an annual fee for each license category. Maybe lastly, let me also mention that if you apply for several classes within a particular category, then the license fee you pay is the highest of the different classes that you'll have applied for. For example, if I apply for a payment system operator license, and I have maybe a clearing license class therein, and a large funds transfer license class therein, the license fee that I will pay is the highest of those classes applied for. Okay, so I don't pay for each class, but I pay the highest of all the classes, and that can be that is the position for those that have now several classes of license under a particular category. So, ladies and gentlemen, that is the end of the presentation. I will, I think, hand over to the moderator so that we deal with the discussion and Q&A.
Making the time to join us and our audience today, and to hand over the floor to you to do your presentation. Thank you very much indeed.
Thank you, Saudis.
I want to be able to move on to our next speaker. At the beginning of this webinar, I mentioned that we would be joined by Mr. Kevin Wava. Kevin is the Vice Chair of FITSPA. I mentioned FITSPA, the Financial Technology Services Providers Association of Uganda. In essence, the Fintech Association of Uganda. But sometimes when we talk about what it is like to get a fintech license, to deliver on a fintech strategy, we don't always have people on these platforms who are actually literally doing that. And I think what's really exciting about having Kevin on the platform is the fact that we will be able to have somebody who can give us real insights into what it's like to build, incubate, and deliver a fintech in sub-Saharan Africa and Uganda in particular.
No, thank you very much for having me this afternoon. I'm here speaking on behalf of FITSPA. Again, those of you who are online who don't know what FITSPA is all about, FITSPA is basically the financial independent non-profit membership for all the fintechs in Uganda. It was incorporated back in 2017 with the support of Financial Service Deepening Uganda. The association helps to create a conducive environment to stimulate innovation in the financial service sector. It also works to increase access to affordable financial services through ICT and the promotion of financial inclusion in a sustainable way. I sit on the board of FITSPA. I'm the vice chair, recently elected this year, but I've been on the board for 2 years. And one of the goals that we do at FITSPA is basically to support the Uganda fintech ecosystem through the 4 main pillars, which is community building, innovation, advocacy, and opportunity. And as we've heard from our previous speaker, Andrew, who comes from the regulator side, we are here to advocate for you on behalf of the regulator and also to build innovation and highlight key issues and challenges that we are facing in the marketplace. In March of this year, 2022, FITSPA launched a State of the Uganda Fintech Industry Report with the intent to capture the journey of the fintech ecosystem in Uganda, to communicate the vibrant subsectors that we have in the industry, to highlight some of the regulatory framework and share some of the emerging opportunities for investors and our partners, and also other key sector players and learnings. From here, we were able to look at so many different things in different categories according to our opportunity. One of those things was to help us understand what it is that is available for us to be able to look at the required synergies. One of those is the overview of the industry. And according to the industry, one of the things we understood in the offering was the financial service companies, in order to improve their use and delivery to customers, we had to look at the scope of the financial services to encompass fintechs and how ready they are to increase their activities in this personal journey that they're going on. For example, in the personal finance sector, tools to enable bill payments, tracking of personal and credit accounts, payments and billing, like you've heard from Andrew talking about regulation. In here, we have payment processing, we have card developers, we have subscription billing, so softwares and other tools. So this study was able to highlight all these very good initiatives that are happening within our members. We had the lending side in the marketplace. We are looking at micro lending. I'm also participating in that space through a company called Jaffe that we are incubating for the markets. We also looked at InsurTech. We look at companies at providing digital services through data analytics and software for reinsurers, again, for the financial inclusion of unbanked. Money transfer and remittance, I think this has been highlighted a lot in the previous, but we're also having a lot of the players who are international and local who are providing software to produce some of this in the study that we looked at. Blockchain was another one that we looked into, capital markets, wealth management, mortgage and real estate, and then RegTech as well, where we looked at audit, risk, and I think that's what we're here discussing today. And these are basically compliance software to help us mitigate some of the issues that we don't foresee yet, but we need to highlight some of these. So within the 100 plus members within the association, we are able to highlight this study and insights on how people have been on this journey the last 3, 4, 5 years and where they're heading to. And this is creating a new market for all of us, especially when you look at the global trends in the fintech industry. New markets are being created, especially under the fintech, to continue to expand and grow internationally. Fintech hubs will also continue to evolve and grow in emerging and developing economies, such as the Southeast Asia. US-based fintechs shall also utilize these opportunities and to invest in growing this presence in previously untapped markets such as Sub-Saharan, and for our case here in Uganda. You look at most recently, Google has actually set up an African investment fund, which is investing in various fintech startups in Africa. This is because with these studies that we're doing, like under FitSPA, it's attracting a lot of investors and other opportunities that were untapped before. When you look at payments, again, during the COVID period, remember COVID-19, a lot of business models were affected and people had to look for alternative ways. The banks are shut down and we had to look at alternative payments. This has allowed the large payment fintech players to seek and consolidate their operations and drive growth through different methods, and also later to adapt to the new growing trend that we are seeing in the marketplace. So all these are highlights that FitSPA and the board are driving, and our members, to help us look at all the different situations that we have on cryptocurrency. And I know this is in the market today. A lot of different trends are happening right now. Most of you know what's going on, especially on blockchain. But what I would like to say is the Central Bank of Uganda and others are beginning to study some of this. This came out very clearly that it's something we need to take a look at, especially the digital currency, and see what sandbox can be created out of this. When you look at the mergers and acquisitions that are growing due to the fintechs that are coming up, In sub-Saharan Africa, we're seeing a lot of these mergers coming up. And again, last but not least, which is I think the most important, is cybersecurity. What this forum is here up today to address some of the risks. With any digitization, the potential for cyber risk is increasing rapidly, and this is actually helping us to address what we have in our ecosystem and third-party providers of new technology. Without addressing cybersecurity, our industry will be affected tremendously, especially as global regulators are increasing the scrutiny of the existing to look at more specific issues and enforcement. You have to look at the data protection and privacy, amongst the many other things that we look into. So at FITSPA, this is one of the things that's keeping us up. We've formed committees to address this. We have a committee on cybersecurity with a few board members and also a few members of the membership that comprises this, and we are coming up with procedures and policies on how to address this so that we are not affected and we can look at the future where we're all working together. The future of fintechs. Again, at the association at FITSPA, one of the things we're looking at is the increasing of our customer delivery of services, companies realizing the need to redefine their offerings, accelerate and broaden the innovation, and also deliver outcomes that are oriented towards solution with collaboration within this ecosystem partnership that we're talking about. In the collaboration during the COVID pandemic, one of the things we noticed is the economy created a rift into new opportunities for the fintech, and we want to capitalize on this. We shouldn't have a pandemic where we depend on new innovation. We should innovate even when there are no pandemics. And I think this is very clear for us, especially in the new markets. For example, when you look at South Sudan, Burundi, our neighboring countries in Ethiopia, Somalia, and the Democratic Republic of Congo. Our research has shown that the ecosystem we're talking about in these countries is ripe for potential fintech, especially on payments and remittance. And these are things I think Uganda is positioned within our members to capitalize on what's around us in the region, not just only looking at Uganda as well. So these are some of the points I would like to highlight and to steady fast for the participants in today's webinar. I would be glad to take any questions and opportunity to answer anything from FITSPA. Again, my name's Henry Kevin Wather, Vice Chair at FITSPA, and I'm also incubating, but most importantly, I'd like to hear more from others as we speak. So back to the moderator. Thank you very much.
Ladies and gentlemen, we could carry on in this discussion for a lot longer, for another half an hour. I think all that this suggests to me is that there really is a need for us to be able to make sure that the round table that talks about the issue around how to license your fintech in Africa that we've got planned in October is a sort of event that you really should be looking out for and wanting to be part of, where we can really drill down and tackle some of these issues. Before I sign off, one quick heads up. This FinTech series is going to continue. We are moving from a regulatory perspective, from a licensing perspective, to a couple of other destinations in East Africa, and then we're heading up north and west to the biggest market for FinTechs in Africa, arguably. And we're going to be hoping to hear from the respective parties at the CBN about licensing, about some of the challenges that we've seen around the licensing process and about conduct around FinTechs. And then we're going to move on to talk about other more specific things in the risk management space, in the regulatory compliance space, things that will help aspiring FinTechs, established FinTechs to learn more about risk, about compliance, about cybersecurity, etc. So follow us on LinkedIn. That's the best place to be able to find out about our events. But then we're on social media as well. With no further ado, I'd like to thank you all very much for having attended this session and for sticking with it. We look forward to seeing you at the next session. I really, really hope you found it useful. And thanks again to our speakers. Thank you, Andrew. Thank you, Kevin. And thanks to everybody who asked a question as well. We really look forward to seeing you at the next event. Till the next time, thank you very much. And we look forward to connecting with you again.